some of the trends that stood out for me, the number one biggest positive trend was the return of personal services. Now, it's not very clear in the data at first glance, but hidden away in the GVA, there's a component called public and community services. But if you expand it, it's actually public, community, and personal services. And that is a sector which grew 17.4%, very high in real terms. We know that government consumption did not grow that much. So basically, I think that whole growth came from personal services, things like your standard high touch, haircuts, restaurants, all of that came back. And on the GDP expenditure side, that actually lifted private consumption. Private consumption was 93% of pre-pandemic levels in the June quarter. It has now gone back to practically 100% of pre-pandemic levels in September. So it's been the return of personal services that has been most encouraging. The second encouraging thing was exports. It's not new. It's running about 23 to 25% higher than pre-pandemic levels. And if you peer into it closely, you see that a lot of it is being done by high-skill exports. Now we see exports are rising across the board, mobile phone handsets to drugs and pharma, auto parts, IT services, some select machinery. In fact, I would argue that this increase predates the pandemic. We're doing something right in high skill exports, and that has been showing up in the data. The third positive, of course, is government capex. The fact that government capex is almost growing 50% year on year in that particular quarter, and although government capex is only a small part of overall investment, it's about only 25%, but running at such a high clip really lifts the entire sector. So I would say these three are the biggest positives that I took away. Of course, there are a few things I worry about, but we can get to that.
Getting to that in a minute. But your point on consumption is very interesting. So a lot of economists read into the overall consumption number on the expenditure side to say that that's still the relatively weak spot in the economy. Is there a distinction to be made in goods versus services, or at the aggregate, what do we take away on consumption?
I'm glad you brought that up. And there's definitely a distinction to be made between goods and services. Now, what we had before the personal services returned was pent-up goods demand. We know that through the pandemic, there has been a rise in income inequality. The rich have gotten richer and the rich are spending. We were hoping that as the rich spend on goods particularly, it trickles down to the bottom of the pyramid. Unfortunately, that was not very clear. And the reason it has not been very clear is that while the rich have been spending, and you look at the Diwali retail sales, they are big numbers, they have been spending a lot on imported goods. So look at consumer durables. Domestic production of consumer durables is 6% below pre-pandemic levels still, while the imports of the same consumer durables is 32% above pre-pandemic levels. So the rich have been spending on goods, but they have been spending more so on imported goods. And therefore, the trickle down to the bottom of the pyramid so far has been weak. So that is looking back. But looking forward, now that we are seeing a pivot from goods to services demand, my sense is that the whole trickle down will be stronger for services. The reason being that many of these services are domestically produced. Think health, education, domestic travel, going to hotels, restaurants, cinemas. And my sense is that once the pivot becomes strong, then the trickle down will be stronger. And the pivot is something we noticed, very starkly in the GDP data yesterday, that yes, a pivot from goods to services is happening. So just to sort of, summarize, when we were only focusing on pent-up goods demand, when our vaccination rates were low, we were not looking at high-touch services, then the trickle down was weak. It was bad for income inequality. But now that we are doing a pivot from goods to services, my hope is that the trickle down picks up. And my sense is that the next 2 quarters will be a function of this.
Okay, just a couple of follow-up questions. So this import component that you're talking about, this is sort of goods like mobile phones, electronics. Is that the category where we are seeing much of this?
Yes, a lot of white goods. So, your standard televisions, washing machines, and so on, textiles, and so on and so forth. Basically, consumer goods, furniture.
Okay. And on services, the other part is that, on goods, you could say that some of this is pent up and, demand, which may not come back every quarter. But on services, the dynamic is entirely different, right? I mean, once the restaurants have opened, you will go out X number of times a month, a week, or whatever, depending on how social you are, I guess. So that then becomes a steady trickle unless there are restrictions again.
Well, look, you're right that you won't buy more than one washing machine. So goods demand sort of comes back once and then it goes away, the pent up demand. But I would argue something similar happens to pent up services too. Like, for a standard family who's not taken a holiday for 2 years, maybe as soon as you can, you take a couple of holidays, but then you don't take a holiday all the time, as in at some point, pent up demand by definition ends. Both goods and services. You can argue that pent-up services demand lingers for longer, but at some point it has to have an end date. And that's why if I sort of try to tie this into how GDP is going to look, my sense is that the next 2 quarters will look pretty good because of this entire pent-up services demand playing through. And I think FY22 GDP growth will be strong. But the big question is, at some point, when we are done with pent-up goods and services demand, then what really drives GDP growth? And that's the big question. What drives growth in FY23 and FY24?